In this week's episode of the Stockscores Market Minutes, I'm going to show you the tools that I use to find trading opportunities. I will do my regular weekly market analysis. We'll figure out where the markets are likely to go in the near term. We'll do a market scan in search of opportunity, and I'll look at the day trade of the week on DERM. All right, so let's talk about trading tools. Your strategies are only as good as the tools to find them. You can have a great set of rules, but if you can't find the stocks in a timely fashion, or if it takes you far too long to find the opportunity, then you're really not going to get yourself very far ahead. And so my approach to finding hot stocks is to look for abnormal activity. We've talked about that in the past. I want to see stocks trading abnormal volume, abnormal price action. And for that, I use two tools primarily. And the tool I use depends on the type of trading that I'm doing. If I'm looking at position trades, then I will look at the Stockscores market scan tool. If I'm looking at day trades, I will use TradeStation combined with my own indicators for TradeStation. I call it the Stockscores indicators for TradeStation, things that I have had coded to identify opportunities. I want to emphasize that good tools can give you an edge, and we should never think though that they replace discipline, focus, or hard work. Tools are just that, a tool. You still have to know how to use the tool to identify opportunities. So let me just show you the tools I use. We're going to jump over to the market scan here. This is on Stockscores, and this is what I use for my longer term trading opportunities. And it's just a page of filters that you can adjust and set. You can build your own scans using these filters, or you can run some of the presets. So at the end of this video, I'm going to run a market scan using one of the presets, and so we'll hold off on showing that until later. When I'm day trading, I use TradeStation. TradeStation has nothing to do with me, or I don't have anything to do with it, except I use it. I think it's a great tool. I've used it for probably close to 20 years now. But the nice thing about TradeStation is you can program your own indicators into it. And so when I talk about my action candle or my different strategies, I've actually had that programmed for TradeStation, and I have made those available to my active trader students. So for example, on this chart, which is the day trade of the week that we'll talk about later, you can see there's little pink dots there. There's these different lines that are being drawn on the chart. That's all my own indicators for TradeStation. And again, we'll look at this particular stock later in the presentation. All right, so let's talk quickly about upcoming events. I've got a couple of webinars coming up next week. If we go back to the Stockscores website, go down to upcoming events, you can see the webinars that are on Tuesday and Thursday and Saturday. How to be a profitable stock investor on Tuesday, how to be a successful day trader on Thursday, and how Stockscores Trader Training can help you make stock market profits on Saturday. These are free webinars. Just go to the website and register. They'll be about an hour long, and I am certain that you will get some good value out of those. All right, let's get into the analysis of the markets for the week, starting us off with the S&P 500 on a short-term basis. And you can see we've had a nice little move up over the last couple of weeks, trying to get back to the all-time highs. We are falling short of those all-time highs. I'm a little bit concerned that we may break this upward trend line, which would be from a falling top relative to this. So I think there's some caution warranted going into early next week, but hopefully we will hold that upward trend line, bounce, and make our ways up to the 302 level where the market is likely to get stuck. So going into next week, if we can break this little downward trend line early, then we're probably going to make that run for 302, 303. If we break this longer term upward trend line, then you want to be cautious because we could see a more substantial pullback and a little bit of volatility going into the end of the month. Looking at the longer term chart of the S&P, it's still healthy. We've got a ascending triangle pattern building here. You can see that we're sort of compressing our volatility over time, and that's actually a good pattern. It's a basing pattern that ultimately we can get a launch off of if we can break out through that all-time high at around 302, 303. We break out through that on the S&P 500, we should take the next leg of the upward trend. Essentially, for the last 4 or 5 months, we've been more or less going sideways. It wasn't like the really strong rally that we had to start this year. We've made that rally. We're now building a base, and hopefully the next rally will come soon, perhaps in November, as the traditionally strong time of year for the market begins. Looking at the Russell 2000, this is the daily chart, and really a kind of a boring market. I've talked about this in the past, not a place where there's a lot of opportunity. This is the small cap sector in the US. We've been grinding sideways for many months. We have little gyrations within that range, but no strong longer term trend. And so if you're thinking about trading those smaller cap stocks, you should be quite selective because the market itself is not helping. All right, on to the Canadian markets. We always take a look at the TSX 60, which is the larger companies in Canada. And you can see that we are in a little bit of a downward trend. We're trying to make a base because we do have some bottoms rising. I think that until this downward trend line is broken, I wouldn't get too optimistic about the Canadian market, but there's also not a lot of downside. And so if you can find specific stocks that have good chart patterns, they can probably do okay, but they're not going to get helped by the overall market until we can break that downward trend line. On the longer term time frame, you can see again just really sideways trading. The market hasn't been able to trend since the early spring. That's okay. We're building a base, and once we get some excitement back, perhaps we need to see what happens in the Canadian election, which is on Monday. And if we can get something positive out of that, perhaps we'll get a rally in this market. For now, I would say be pretty selective with Canadian stocks. Another place where you have to be really selective is those Canadian microcap stocks. This is the TSX Venture Market, and you can see it's in that downward trend. We're getting close to support from the lows of last year, and once we get there, we should make a bounce. Starting to see a little bit of perhaps bottom fishing coming into those cannabis stocks, which have really been beat up. And so I think that perhaps we're close to a reversal of that weakness, but there's no break of the downward trend line yet. So wait for this downward trend line to get broken before you get too optimistic. On to currencies. US dollar showed a little bit of weakness this week, but it has not broken the upward trend line. You can see that we've essentially pulled back to it. So it's okay. We should see a bounce in the near term, but something to watch for. Do we, get a falling top? Do we break that upward trend line? If so, perhaps the 2 years of strength that we've seen in the US dollar will finally come to an end. Not a strong signal of that yet, but certainly a caution signal is warranted. Looking at the Canadian dollar, of course, that weakness in the US dollar helps the Canadian dollar. We think about the pattern. We broke the downward trend line here. We've been building rising bottoms since. We ultimately need to get through this peak. We broke this little pullback here this past week. So they're starting to get some optimism building in the Canadian dollar. I wouldn't say it's a great opportunity yet, but it does seem like the Canadian dollar is probably more likely to go higher than lower in the months ahead. But I wouldn't say we have a strong signal that it's going to trend in a really significant fashion just yet. On to interest rates, the Treasuries are what we look at, the US Treasuries. If this is going up, interest rates are going down. You can see generally we are in an upward trend. We got pretty overbought here. We've pulled back to the trend line. We've now built a falling top. And so my concern is that we're going to break that upward trend line, which would mean interest rates will start to rise. So watch for that if you're thinking about getting a mortgage or something like that. If that upward trend line gets broken, then you might want to try to lock in some of that debt. And finally, the commodities area. Gold has had really a good run this year. It's building a flag. I'm concerned about this falling top that has formed. And if we start to break down through these support levels, I would get bearish. For now, I'm neutral on gold, but that's something to keep an eye on. On to oil. You can see the oil chart here is in this downward trend. It tried to break the downward trend a few weeks ago. It failed. And we're still in sort of a pessimistic pattern. We've got pretty good support there. What you want to watch for is, does this downward trend line get broken? If so, that's bullish. If we break this vert or horizontal line of support here, that is bearish for oil. So finally, the fear chart. Of course, fear pretty low right now. This is the volatility index, the ETF or ETN, VXX. When this is low, essentially, there's not a lot of fear in the market, not a lot of volatility in the market. But often you will get breaks in one direction or the other. So the fact that there's no fear doesn't mean you shouldn't be cautious. It just means that as of today or as of Friday's trading, it's not a big concern for the market right now. So my ratings then, long-term neutral on US stocks, short-term bullish. Canadian stocks neutral on both time frames. Gold neutral on both time frames. Oil neutral on both time frames. Sorry, my comments here didn't get updated. I'll just quickly give you my sense of what's going on. The longer term look for the market, I'm a little concerned that we may get a break of that upward trend line, and so we want to watch for that. Oil and gold, they're relatively stable, kind of boring. I wouldn't get too excited about trading them. I think you have to be selective in the market right now and really focus on finding alpha stocks, finding those stocks that are trading on their own story and behaving abnormally. All right, let's jump over to the Stockscores market scan now. And we will jump back to Stockscores, go to the market scan. And this week I'm going to run a market scan on the Canadian market, the Stockscores Simple Weekly Canada Scan. So this is one that I use to find longer term trading opportunities on the Canadian market. So we'll run this, and I just did this before I started the video, and I know that a few of the early stocks in this scan were examples of what you would want to look for from some time ago. So ultimately what we're looking for is stocks that break out from good patterns with abnormal activity. Many of these stocks I've talked about in recent weeks. For example, this one breaking through resistance from this ascending triangle pattern. That was a strong signal that that stock wanted to go higher. I still like it. It's just it's up a little bit already since originally that breakout happened. If we continue along, Ballard Power, some of you may recall that this was a stock that I featured, I believe, in this video when it broke this downward trend line with that abnormal activity there, and it's been trending higher ever since, looking quite nice. Extendicare, another stock that I featured, I don't know if it was here, it may have been in this video, but I know I wrote about it in one of my columns that I write. And there you can see the build of a rising bottom, the break of the downward trend line, that's at $8. It's now at $9.50, a nice healthy return. When you think about the Toronto Stock Exchange really being flat for the year, it hasn't done anything, or sorry, in this time frame since May, the fact that this stock is up, 15-20% is a pretty good outperformance, and it's all predicated on that break of the downward trend line. So continuing along, I'll see if there's anything new. Element Fleet Management, EFN, another stock that I featured somewhere right back in there. Still looks good, but I think it's a little late to chase it now. We'll just continue along. I think that there was a couple of stocks that I liked today. So the process is pretty simple. You run the scan, it does most of the work, and then you got to check the charts for the patterns I can teach you to look for. So here is Richelieu Hardware. I like this. I don't love it, but I like that it's broken its downward trend line. It's starting to come alive. Volume isn't really strong yet, so we have to be a little bit selective there. But if it can start to see a pickup of volume and move up through that $27, $28 level with some volume, I think it could start to perform fairly well relative to the TSX in general. Just continue along a little bit more here. Here's another one that I like. It's not something I would buy tomorrow, but something to really watch, because this stock has what I call a bottom fishing pattern building. A bottom fishing pattern has a break of the downward trend line, which it's done. Then we build a rising bottom, and ultimately we have to break through resistance from that rising bottom. So if this stock can get up through $46 a share with some volume, I like it. I also like that the yield is quite nice, 5.8%. Again, that's historical yield. Doesn't guarantee that that will be the yield in the future, but generally bank yields are fairly safe. So a strong 5.8% yield and the potential for some capital appreciation if it can get through that $46 level. So that's the kind of work that I do with the market scan, and hopefully that's useful. So the day trade of the week was a long trade on DERM, and the signal here was the action candle to start the day. You can see my little pink dot. That broke the stock out of this trading range. Basically, nobody cared about the stock, very low volatility, and then it comes alive. The economics of the trade were really nice. For $100 of risk, it took 450 shares, which was a $2,700 of capital, but of course you can margin that 3-to-1. So you actually would only need a little over $900 to take this trade. And it finished the day at a 5.2 RR, which represented a $520 gain on your $900 of capital invested, a 57% return. However, the stock actually did a lot better. It went up like a rocket, and you probably could have locked in a little better profit, maybe 8 or 9 RR, and now you're looking at a trade that could have earned you a 100% return for a one-day hold, not even a one-day hold, a 2-hour hold, a 1-hour hold. So a really nice day trade on DERM. All right, well, that has been the Stockscores Market Minutes for October 21st, 2019. Hope that you've enjoyed it. And if so, please click on that like button, leave a comment, tell your friends, subscribe to the channel, do anything to help. Most importantly, have a great week in the market and trade well.